Welcome to Wealth Matters podcast. And we have Dr. Chen today. First time a doctor on the podcast. How are you, Cherry?
Hey, Alpesh. Really happy to be here, and hopefully we can, share my story with your audience and provide some good insights.
Absolutely. So, as I mentioned, Cherry is a doctor based out of Dallas, Fort Worth area. Cherry, can you tell my listeners what's your primary job or business right now?
Yeah. So, like you said, I'm a physician in Dallas. My family's from here, so I am an internal medicine hospitalist physician. Yeah, I work inside the hospital full time, and so, but obviously, I also do investing, just like a lot of people. And so, I'm really happy to share my journey and what I've learned with your audience.
Yeah, it's perfect for a doctor to invest in real estate, of course, because they do understand, even though they don't understand the real estate game. But it's so important for them to understand the tax benefits and of course, appreciation side of real estate.
Yeah, no, I mean, I think it's perfect for a lot, everybody. But like just like any investment, or I feel like any profession, it's you're kind of most of us are very limited in what we are exposed to. A 401k or the stock market, and that's what you're
Right.
comfortable with. But there's so many ways of investing, even within real estate. So. I think it's just a lot of being exposed, hearing other people like your podcast who've done it, being educated and knowing that there's many ways to invest outside of the stock market. And your 401k, I think, is a very
Right.
big first step, because that's pretty much what we're told, right? So
Yep, exactly. And I'm not gonna put you on spot, but as you're a doctor, I want to talk about that, right? So you already make enough from your profession, right? So why did you start investing into real estate?
sure. Yeah. I mean, yeah, it's I think, well, now kind of looking backwards, I've been doing this for about 5 years now, investing passively in apartments or commercial real estate. Is that no matter what profession, however much money you make, is at the end of the day, you still have 24 hours a day, 7 days a week. And at some point of the spectrum where you're either really burnt out from your job, which a lot of physicians are, or you start
Yes.
realizing, hey, I do only have 24 hours. No matter how much I make, I can't work forever.
Right.
And whether it's from burnout from your job, or just more increasing family demands with your family or your kids or your parents, that you are like, hey, I wish I had more time. Everyone always says, I wish I had more time
Oh yeah.
to do this. And so at some point you make that connection. Hey, I can't work forever. Trading my time for money. What else is there? And when we traditionally invest in 401k, we think, oh yeah, that's investment, but that doesn't provide you income in the way that real estate does. And so that's kind of what made it a much more attractive option for me, as far as where do I want to put, my hard-earned money to work for me, and trading the money that I have from my W-2 job to, you know, really buy myself more
Right.
time is basically what it came down
Yeah,
to.
and I'm glad that you mentioned trading time for money, and that's all. That's what we do, even as an employee or even as a small business owner like me, right? Because if I stop trading my time for money, I'm not gonna get money, right? So the value is in the time component, right? And once we realize that, we need to make sure that our money starts working for us, and we are not working for money, right?
Yeah, and that was, I mean, my first, like, not a big aha moment, but that was like, well, I don't want to work forever. I do love medicine. I still intend to
Right.
work in it, but everyone needs options. And really, I feel like, in our society where it's, your W-2 job is your only income source, I'd really rather be on the alternative side, where I have multiple streams of income, just for planning for your family, for anything. It's you want actually have more multiple streams of income. That makes more sense than just relying on one single source, right? But you spend your whole life on one single source, where
Yeah.
it's unstable, people get laid off, or
Yeah.
government jobs and all that. So it's really, I think, prudent for everyone other means, how do you get more multiple streams to have more stability or predictability?
No, that's a great point as well. Because if you have only one source of income, that's a single point of failure. And if you,
Right, right.
if you get, not only you get fired, that's pretty common, but even if you are disabled or something happens, then you don't have any other means to provide, roof on to your family, right? You don't have any backup. And
Right,
I want to
right.
have backup, right?
Exactly. So I feel like now that I've built up, more multiple streams, it's like almost feel kind of irresponsible just to have one, right?
Yes.
But it's kind of hard to break out of the mindset, which I think is probably the most important for any investor, because we're only told such limited things, and none of us really have a financial or investment, education, no matter what field you're in. Even if you went to business school, they don't teach you how to
Nope.
invest or
Nope.
what to look for. So the mindset, I would say, is probably the hardest part. And having your podcast out there to kind of expose people,
Thank you.
that's very important.
I appreciate that. So, can I
Yeah.
ask you something about, you said that you started about 5 years ago. So, what was your first investment in real estate and what did you learn from that investment?
Yeah, so I started out, so my very first investment was actually as a passive investor, limited partner in an apartment syndication. But I got to it through first trying to look for a single family. I live in Dallas, and so
Mm-hmm.
I thought, okay, great. Most people, you think, okay, I want to invest in real estate. The natural progression is to say, oh, I'm going to go buy a single
Right.
family
Yeah.
rental. You don't say, oh, I'm going to go invest in an apartment.
Correct.
One, you probably don't know you can do that. And secondly,
Yes.
how do you go about doing that, right?
Yeah.
So I was researching, and basically, long story short, I learned about apartments and that you can invest in these in this way. It's a very different way of investing. It's not new. In fact, a lot of people do it, and there's many advantages to it. And so once I learned, like you said, tax advantages, forced appreciation, diversification, predictability. I went to a local conference. I met the people who are doing this. I educated myself, and then I invested into an apartment syndication. That was my very first investment.
That's awesome. So, you mentioned passive investment, right? What do you mean by that?
Right, because sometimes people say, well, nothing is ever truly passive, right? Like breathing is not
Oh
passive.
yeah,
You have to expend energy to even breathe and live,
like the
have
even
to,
the
right?
turnkey guys, right? The turnkey guys,
Yeah,
when they say it's truly passive turnkey investment, and I'm like, when I did my very first four properties, I was busy like crazy.
yeah,
I
right.
was like,
So
where is it? Where is the passive?
right. So nothing is 100, but I feel like, so definitely as a passive investor, what they call you when you invest into a syndication like an apartment is about as passive as it can be. And in the technical way you define it is, your money is working for you independent of your effort, right? Like I'm not active. I'm not managing the apartment complex. I am not, tending to the needs of the tenants. I'm putting my money in as equity, and through other people's efforts, I anticipate some sort of return, right? So
Yeah,
I am not actively involved in the project, so I am passive. My money is working for me, and so that's the way I see it.
that's a
And then you get mailbox money. Of course,
right.
everything has its risk, but you work with good sponsors or good deals. Ideally, then you just get checks in the mail for your investment, and so that's about as passive as you can be. So the active part is you understanding and educating yourself, and then picking a deal that you feel comfortable with.
Right.
But that's the extent of your homework, right?
Yeah, that's with every investment you do, right? But
Right.
once you have invested the money and you don't have to look into the operations, you don't have to manage the asset, then that's the passive side of it, right?
Right. And it makes sense if you're, a busy professional like an engineer or a doctor, because, you want to focus on your job. You don't want to go focus on managing tenants.
Right.
And so this is very ideal for, you getting to benefit from real estate, but not having to be actively involved involved in it. We don't have time or we don't want to, right? If you want to go be active, that's a very different way of investing.
Right.
And I would call that a business rather than an investment.
Exactly. Yeah. Once you become active, that's a business and treat it like a business.
Correct.
Right.
Right.
We thank you for that great explanation about passive investing. Why should someone look into investing passively?
Yeah, a lot of reasons. I mean, I think so. Certainly, what when I talk to my investors now is before you talk about any investment, it's like what is your why? Just like start with your end in mind or your intention or your objective, right? If I and so for why would you invest passively? Well, one, you don't have time to go be an apartment syndicator, right?
Mm-hmm.
You enjoy your job or you still have your W-2 job, which provides you your income. So one, it allows you to diversify into real estate, which most people understand. Real estate makes money. Real estate can be a good investment, but
Yeah.
you don't want to be active, right? So you can invest and still keep your job. And two, you're breaking that trading time for money, and switching it, trading your money for time. And eventually you build up enough of that passive income where you can cover your expenses, and people, call that financial independence, right?
Yep.
So um, those are, I always say, like, begin with the end in mind. If you want to work forever, then you don't need to invest, right? Or if you want to go actively put a deal together, then you don't need to passively invest. But I think for the majority of people, you have time limit constraints. But we all invest in some way. You invest in your
Right.
401k, you invest in your Roth IRA, to realize there are other ways, and what are the advantages. And for me, what I think the advantage of this is, it can provide you actually with an income stream that is predictable and stable with tax advantages. That's independent of my time. So I don't know that many other investment options out there that can do that and that provide these kind of benefits. And so if that makes sense to you, then I think this is a great way to explore, outside of the Wall Street, outside of the stock market.
And then that's great as well. So just to add a couple of points, it just when you mentioned about active investing, just reminded me that one of my friend who is an engineer, and because he saw everyone is flipping around here, and by the way, I have never flipped, even though I have been doing this for 7 8 years, because
Yeah.
I felt it was way too active. Even it's more than active business, it's
Oh my God.
literally
Yeah.
an S corporation and whatnot, right? So
Yeah.
yes, he started doing that, and he realized he started burning himself out, because 5 days, 40 hours of job, and then
Mhm.
weekends he will be trying to flip the house. I'm like, you don't have life left. You don't have family. You
Right.
talk about work-life balance, this and that, but you are always, at the site. And then once it was done, he was always worried about when is it gonna sell? When is it gonna sell?
Yeah, it's just like that's just causing more headache or stress in your life,
Exactly.
when your investment should be enhancing your life, right? And so
Yep.
that's why I forewent all that route. Yeah.
So, can you tell me, do you focus on certain markets or asset types, let's say multifamily, mobile home parks, self-storage, or commercial buildings, or even certain type of deal criteria you're looking for, like debt, if it's a debt deal, or equity, or it's a very long-term holding? Can you tell me what do you look for, or what do you
Yeah.
focus on?
For sure. So I have done most of investments are multifamily apartments, but I've also done mobile home park and self-storage, because they're, considered commercial real estate and
Right.
recession resistant, right? So you want
Yes.
to put yourself, as nothing is risk-free, but you want to put yourself as much on the correct side of the equation,
Right.
favorable market, favorable demographics, favorable asset class, right? So
Yes.
I haven't invested in retail just because I don't think it's as favorable or resistant as,
Right. Retail's a
apartments.
different
So,
story.
right. Yeah. So most of the deals are part in there. And then, once, you have the asset class, you want to definitely look at the operator or the sponsor. I find that a lot of first time investors, they kind of go backwards, right? They look at, oh, what a great deal. I get
Right.
10% returns or whatever. And then they look at the market and lease, the sponsor. It should be the other way around. The more you kind of expose yourself, it's who is the sponsor first. And then you look at the market and then you look at the deal. Because the sponsor is the one who's managing the asset. Everything they do affects your returns. And so they're the one in charge and steering the investment for these next 5 years, right? So
Cool.
if you hear like, a great investment in a poor sponsor's hands can turn bad, but
Right.
an okay investment in a good sponsor's hand can be good, and you never know
Right.
where the market is going to go. And if the market's been good, so everything looks great, but if it turns, you want to be in good hands, right? You want to be in good hands. So
Yep.
um, definitely look at the sponsors team's track record, who they are as people, how they communicate. How anybody does anything is how they'll do everything, right? If they're
Right.
communicating to you poorly right
That's a
now,
great point.
wait when times go bad, how are they going to
Yes.
actually communicate? So it's in the details for sure. So definitely it's, and people, I'm sure you've heard, it's a relationship business, right?
Oh,
So it's
absolutely.
definitely about the people. These are the sponsors, the property management company, the tenants. It is an investment in a business, but it's definitely about the people. So I would say that's something maybe first time investors don't put as much emphasis on. And so that's why I try to go out. We met at a conference to meet these
Yes,
people, to talk to them, shake their hands, talk to
absolutely.
them.
That's the key.
Exactly.
So
Yeah.
let's take a quick break, and then I do want to discuss about what exactly do you do when you receive a deal from a syndicator. Let's take a quick break there. Welcome back to Wealth Matters Podcast. I'm chatting with Dr. Chen about passive investing. Hey, Cherry, before the break, I loved what you shared about, different types of assets and the deals, etc. And I agree that you want to go in, as many assets as possible. Of course, retail is not one of those, but mobile home parks, self storage, multifamily, because that gives you good diversification from asset as well as the market perspective. But can you share with us what steps do you follow personally while analyzing a deal? So let's say, what do you do as soon as you receive a deal deck or an email from a syndicator?
Yeah, I mean, so I would say the process, probably just like we talked about, begins way before that, because I won't look at deal decks if I've never met the sponsor, I've never talked to them, I don't have
Good
a
idea.
relationship with them, right? Like you go, if some people, most investors don't go to a lot of these conferences or meetups, but you go and you meet a bunch of people. I'm getting emails from people. I'm like, I don't even know if I talk to you. Why would I
Right.
even look at the deal, right? So I think the process begins way before that. But to answer your question, well, I already feel comfortable because one, I should already know the sponsor, kind of what their investment criteria are. See if that fits with mine, right? So number um, one, you have some relationship with the sponsor, and two, then you look at does their investment criteria meet yours? I prefer the stabilized properties, class components, so I can have that cash flow plus equity gain at the end of sale, right? Some people will do development, some people will do deep value add, where it's
Right.
a pretty vacant property, you had to put a ton of work. So personally speaking, I'll talk to these sponsors who meet that criteria, right? If it's a sponsor who only does development, well, maybe I'm not ready for that, right? There's
Mm-hmm.
different risk profile with this. So one,
Yes.
the sponsor, two, make sure their criteria matches what you're looking for in investment. And then three, you can look at the market, and then more importantly, the sub-market where the property actually is. But looking at the market level, one, you want to look at, hey, is this a favorable market, right? Do I want to be investing in
Right.
Detroit or New York right now? Probably not. But why would I invest in DFW? I'm from here, but it's beyond that. It's because there's certain, like I said, put yourself on the right side of the equation. There's 100,000 jobs coming here every year, 500
Yes.
people moving here every day. Headquarters, these aren't going to go away tomorrow, right? If
Nope.
during the last recession, Dallas actually did just fine. And what I
Yes.
think is, if people are preparing for a recession, which these companies are, why are they? They're actually moving to Dallas because it's lower cost, great
Yeah.
workforce,
No
great,
state tax for
no state
employees.
tax. So they're
Right.
already actually making these moves to be more recession resistant, right? So just because there's a recession, you as an investor, well, what does that mean? That there's so many markets in the U.S. And it doesn't mean it's going to be 2008 or every market's going to be affected the same way. So um, you make sure the criteria fits you, you make sure the market makes sense, and then you look at the specific property and where it's located to see, hey, do these numbers make sense? What is the occupancy? What is the value add? And you can, the great thing about these investments, you can talk to the sponsor and say, hey, can you explain this business plan to me, right?
Yep.
That they have the rent rolls, they have the financials, you can verify all those numbers, you can't really make it up, right? So that's what I enjoy about this, is an apartment essentially a business, and it's very objective. Certainly with pro formas, you have to make some sort of guesstimate, but
Yeah.
even then you have data, you have information, to be as objective as possible.
Oh, those are some great points. So, can you tell us more about the investments you have made? So, can you share with us the best investment you made passively?
So I would say actually the best one so far probably was actually my first one. I don't know if I got lucky,
Oh,
but
wow.
certainly
That's
it was
beginner's
IMA.
luck.
Yeah, beginner's luck, right? It's because it's been actually returning 11%
Nice.
annually for the last, I guess, 4 years now. So,
That's great.
um, these days it's closer to 7 to 8%, sure, or averaged close to 10%. So because the market's doing better, but you're still able to get 7 to 10% depending where you're looking. So yeah.
So, and can you share with us if you had any worst investment or a worst deal?
Yeah, I've only still done passive investments. I haven't done any single family or other projects like that. So the, quote unquote worst deal is one where I'm actually still getting distribution. So I can't even say it's terrible.
Oh,
I'm
okay.
still getting
That's not bad if you're
45%.
getting, because
Yeah,
for one of my deal, and this is from one of really big syndicator, and we haven't got paid for 2 years, and this was
yeah,
when I was starting out on this passive side, and
right.
I don't know if we'll get our money back, but they have
See,
made so many
yeah.
mistakes during that investment.
I'm sure you learn for sure, because it's
Yes,
like, that's why I say people, even in great markets like this, you have people who have not done well,
right.
or in poor markets, people who have done well. And what's the difference? The sponsor, right? And so,
That is
once
key.
again, it's like, even though this project, which is quote unquote my worst, is still giving me 4 to 5%, return better than in my pocket every month. So it's still better than my alternatives,
Right.
and definitely better than, like, I've heard stories like yours where they're like, oh, we haven't gotten any distribution. So
Yep.
um, definitely that's why it's, talking to investor references, talking to sponsor, talking about their other track record.
Yeah, I had. Yeah, good. So, and any lessons you learned from that deal?
So probably, so there's two deals where it's been lower than projected, and one is, both of them involve, like, expenses, like on the property, right? Like
Oh, I
unforeseen
see.
expenses. And then one is like a property management company that underperformed, right? So then to
Oh,
go through that change is a long process, right?
yes.
So definitely also investors, when you look at these deals, we hardly emphasize the property management company, right? But they are a big part of the
Actually,
process.
they are the biggest part of this puzzle, right? That they are
Right.
the most
Every dollar
important.
that goes to them affects your return. So it's a big part of when the sponsor does their homework right, they have to choose a property management
Yes.
company. So, and the property management company helps put in the budgets and et cetera. So it is very important as you look at more and more of these deals. Well, who is a property management company? How do they decide? How confident are we that they can execute? Huge, huge factor.
That's awesome. Um, so, last question I have: can you mention the mistakes you have made so far, or if you have made any, and if any lessons learned from those?
Yeah, so I mean, I feel like any investment, the mistaking points are going to be one, the sponsor, two, the market, three, the deal, right? Which are the three components you look at for any deal.
Yep. Yep.
Um, and so I try to minimize those, and so I'm still young at this, right? I've been doing it for close to 5 years, so I can't say I invested through a downturn because I didn't.
Nope.
But I can also say people have invested through this time who haven't gotten the same results, right? So um, I would say one, I definitely really emphasize the sponsor team. Like, I'm not going to put my money into a sponsorship team who's only done 2 deals, right? Or
Hmm.
they're not in it full time. All the sponsorship teams I work with are all full time real estate professionals. They're not still a doctor, or they're not still engineer trying to do their first deal, right? It
Yeah.
might be good, but I can't expose my investors
Nope.
to that kind of risk. So just looking at all the different points where I can de-risk and putting myself in the good markets like DFW, Austin, Texas markets have been great. Um, and then three, the deal itself, whether that's probably the my weakest point, which I've tried to improve the most through understanding the underwriting, understanding the pro formas, how are the deal sponsors getting these numbers so I can feel confident that those can be accomplished.
That's awesome. This is very, very helpful. So we are almost wrapping up. Do you have anything else we did not discuss?
I mean, I feel like I could go on forever about this topic, but really, I tell everyone who I talk to, just because it's good for me or just because it's good for you doesn't mean it's good for everyone, right? Like, every investment has its pros, its cons, and that's why I always
Correct.
go back. Does it fit with your goals?
Right.
And then you go learn about it. And there's always somebody who's done it before you, right? So these podcasts, and when you learn from
Yep.
other people's stories, everyone, I feel like, is really helpful in just helping answer questions, and then I tell my investors it's just as important for me if you say this is the right investment for you, just as you say no, it's not for me, because at least you made an informed decision. I feel like
Yes.
that's what we need. You need to be informed rather than, hey, I feel like we're just brainwashed to invest into our 401k. Do you know what that involves? Do you know the fees? Do you know what's actually going on into your portfolio? So if anything, is to just be more proactive about your investments, and going from there rather than kind of blindly doing what you think is what you should be doing.
So some of really great points, and I agree. Right, one is every investor is different, and this is why even when you invest in stock or mutual fund or going to a fund manager, they ask you, what's your risk profile, right? How do you want to invest?
Right.
Do you want to go conservative, moderate? Do you want to be aggressive? And it's the same way it applies to the principle applies to real estate and all other type of investments. So investor needs to understand, okay, does this investment make sense for my investment goals, right? Does it work for me long term or in short term, etc. So yeah, some pretty great points. Thank you so much.
Yeah, I mean, we didn't touch on, because most of these investments are, like we said, 5 years, so there is that illiquidity component,
Yes.
right? So to realize, well, does that fit my criteria or does that fit my timeline? So But yeah, just being informed by, listening podcasts like yours, Bigger Pockets,
Oh,
forums,
yes.
other investors, who are more than willing to share their experiences for sure.
Yeah, and again, I'm glad that you brought up illiquidity, right? Or for at least 5 6 years. But on the other side, also, I love this side of the business where, as you mentioned, it's the education. There is so much education out there. You just need to open up and start asking questions. It's not same as stocks where you heard from someone that someone is trying to buy Apple, so I'm gonna go buy Apple. Here you can
Right.
literally learn a lot more about this indicator, the deal, as well as the business in much more detail. And even you can ask people like you and I and learn more about how the passive investments work, etc. And if you have worked with a particular syndicator or not, even, right?
Right. That's why I feel like, even though I've invested in so many of these projects, I haven't really lost any sleep, right? Because I feel like I can go to sleep not worried about it because
Mm-hmm.
I made as informed of a decision as possible, right?
Yep.
You know, exactly. So,
Yeah, as long as you did your part, you did your proper due diligence, and as you said, made an informed decision, you shouldn't lose your sleep.
right, which is more than most of us are doing when
Right.
we are quote unquote investing. So,
Right.
yeah, my biggest takeaway through these 5 years, not even talking about real estate, is just that, be more proactive, not only in your investments, all facets of your life, certainly, so that you can then explore options. If I wasn't looking to become more informed, I would just still be stuck in my 401k, right? I
Right.
wouldn't know there's any other way to invest because nobody talks about it or mentions it. Yeah.
Perfect. So, how can my listeners reach out to you, Cherry?
So my platform is therealestatephysician.com, and that's kind of where they can learn more about, basically everything we've talked about here. And I'd be happy to connect and reach out, answer any questions as an investor, as a new investor, or, somebody who's looking to want to invest in syndications. Uh, like I said, I'm all about empowering the investor first and then making an informed decision. So they can just find me on my website there.
Thank you so much, Cherry. I enjoyed the discussion today.
No, yeah, thank you for having me.
Have a good one. Bye.
Bye.